Hello, welcome to the show. It's the Money and Markets Show, and I'm Charles Boyd, your host.
And I'm Shamim K. Matuvu.
Now, it's been a tough year generally for those in business, and many will tell you that their relationship, especially with commercial banks, has been a bumpy one. Of course, we've seen media reports pointing to the fact that many businesses have lost property because of failure to service their loans.
And of course, tonight we seek to understand what commercial banks have in stock for us, ways to resuscitate the economy.
Ethics is important for one thing, because without ethics, you don't have governance. And when you don't have governance, that's the beginning of the failure of the whole, the trust component. Remember, in my presentation, I talked about capital and integrity, the capital stock. If you don't have ethics, you can't build trust. And banking, or the financial sector, does not sell loans or services. They sell trust. Constraints around access. Constraints around access, perhaps even relevance of the financial services, and or possibly the pricing of those financial services. So it's not about lack of trust. There are other factors outside of trust that drive the law, that explain the low financial inclusion. If you look at the economic circumstances we're in, economic recovery is slow. We have all these factors buffeting the economy: inflation, we have geopolitical tensions, Russia, Ukraine, M23, Rwanda, and all these things. And then remember, the shareholders of these institutions, for the last 2-3 years during COVID, were not earning dividends. So now they're putting pressure on these institutions to generate revenue for them because they've committed their capital. Now, in an environment where you have pressure from your employers to deliver on numbers, you have an uncertain economic environment, there is a tendency to want to sidestep ethical conduct to try and meet your numbers and your targets.
So for us, when it comes to banking services, banking, I think, is a relationship of trust. The need to show consumers or our customers that their deposits are safe with us and we stand for high ethical standards. So the reason that we thought of promoting this particular workshop, where we show some contribution in terms of thought leadership by bringing in experts to discuss the topical issue of ethics. As you noted, we had the Bank of Uganda present, and we have our group head of ethics from APSA. So we thought it is our contribution in creating that, playing a shaping role in society and helping to create awareness on the importance of ethics in the performance of our business and mandate as bankers in the financial services industry. The important thing is, for you to be operating in an industry such as ours, you have to have a strong value system. And by saying embedding ethics in a business strategy, it basically means that the strategy that informs why you exist or what you're trying to achieve in a particular sector should be laid or built on the strong foundation of strong ethical values, values that define and shape how you operate as individuals in that particular market context or in that organization. So that's the correlation of why we're insisting that whatever we do as an institution or as people or players in the financial services, it should be on the basis of a strong ethical foundation, because our customers expect us to protect their interests as we manage their deposits in the discharge of our duties. We have strong guidelines in terms of how you are expected to operate as a person who is operating in the banking sector. I'll tell you for a fact that right now we have a new set of corporate governance guidelines that has been issued by the central bank. They are now currently working on what they call the fit and proper standards that determine the sort of people and behaviors and characteristics that they should have if you are going to work in the Ugandan banking services sector. So if you were to ask me, I think we have a strong regulatory framework and we have a responsive regulator and market players.
In the financial markets, the shilling has made some gains against the dollar in the last 2 months, after a tough run that stretched more than 4 months where it touched its lowest points. The 0.2% gain by the local unit, though minimal, is significant given the fact that other economic fundamentals such as inflation remain fairly weak. This has been attributed among others due to the relative fall in oil prices and a modest increase in dollar inflows as the Christmas festive season approaches. The shilling earlier in the year came under pressure from both internal and external factors, including the rise in oil prices, which increased Uganda's import bill, and the increase in interest rates by the US Fed, which saw a flow reversal in some offshore investments, and the huge debt servicing bill for the country. The central bank's role to stabilize the shilling has been quite significant. BOU has since April this year pumped into the market $260 million to stabilize the shilling. Private analysts, however, investing in more domestic production to support government's import substitution aspiration remains a more sustainable intervention to farm the local unit. Uganda runs a fairly big balance of trade deficit, implying that it imports a lot more than it exports, which besides adding pressure to the local shilling, exposes it to more economic vagaries, including imported inflation. The shilling continues to hover between 37.50 and 37.80, having come back from the region above 3,800 shillings in the previous months.